for being here today. We've got a fantastic attendee list for our Fintech Friday and this discussion with Mark Whitcroft, very international as well, which we also very much appreciate here in Luxembourg. So without further ado, let me just do a quick intro for Mark. I always feel slightly weird doing this for people that I know quite well because it seems so formal, but I'm gonna read this because right. So Mark Whitcroft is one of the founding partners at Illuminate Financial Management, a venture capital firm focused on enterprise fintech and software for financial markets. Mark obviously sits on the board of a number of the portfolio companies and also works on the Fintech Advisory Panel for the UK's Investment Association. Prior to Illuminate, Mark was involved in a number of financial accelerators, which is actually where we met, right, Mark, at Startup Bootcamp, Value Stream Lab, as well as mentoring for a number of the other bank-led accelerators such as Deutsche Bank and Accenture. I remember this fondly, Mark, when we first met. You were just making the transition from having spent about 12 years working at Deutsche Bank and HSBC and other institutions in capital markets, and a very successful transition as well it was. Mark is an alumni of University College London and of Harvard. Oh, wow, Harvard Business School, Mark. I didn't know that.
Well, there you go. I mean, apparently the standards have dropped these days. And I think...
God, I see you in a whole new light now.
There you go.
My God.
And I think one thing I'd want to point out about our introduction, actually, is when I first came back to London and was moving into Fintech, down a list of 15 people that I wanted to sort of get views and insights into what my opportunity really was, and you were on that list, and you were one of the fastest to come back and one of the most helpful in terms of insight. And also on that list was my business partner from Illuminate. So a lot of value add from those initial conversations. So thanks for your help then, and thanks for having me today.
It's been a pleasure knowing you, Mark, and seeing what you've achieved has been incredible. But just very quickly before we get into the questions, I think maybe worthwhile giving a bit of background on Illuminate and the kind of things you guys are interested in and doing.
Sure, absolutely, and great to be here today. Good way to fill the end of Fridays and a busy week. So it's good stuff. So we focus on two things really: fintech that serves financial markets institutions, so banks, asset managers, stock exchanges, brokers, wealth managers, family offices, and we're looking at either vertical solutions that are fintech specific or horizontal solutions, particularly around sort of data architecture that are servicing the same institutions. We've been going for about 6 years now. We're on our second fund. We're a team of 10 based in London and New York, and we focus on B2B software and B2B2C software within the targets that I mentioned. We've invested in 15 companies. We sold our first one last summer to Bloomberg. And we also advise a number of financial institutions on fintech and fintech engagement. And happy to go into any more you want to hear.
But look, I mean, I find that very interesting because obviously you're deeply involved with your portfolio companies, deeply involved in the fintech market. So maybe just to kick off, because it is so poignant, what have you been seeing? I mean, being in London, particularly obviously in the heart of finance, what are you seeing changing as a result of what's going on today with this COVID-19 situation? What's different? What are some of the opportunities or the way you're rethinking the future as a result of COVID-19?
Yeah, sure. So clearly a topic that's impacting absolutely everybody on the phone and across the globe. You know, I think to start off with, the obvious thing is that work from home is okay, right? And I think prior to COVID, a lot of firms would have had a cultural resistance to that. So I think the first thing is that business continuity plans that a lot of these big institutions have been thoroughly tested and pushed to the limits, because they were probably set up for a disaster in one geography or one city. What we've had in this circumstance is entire global workforces over a matter of weeks migrating to work from home. So the first thing, piece, right? A number of firms have already announced that post-COVID they'll go to 100% work from home. A lot of the firms that have led that initiative are Silicon Valley engineering-led firms. So a lot of the management are engineers by thinking, and they tend to work very structurally. So you can understand why those organizations have done that. Very few banks have led with that so far. I've only seen one announcement from ING Spain earlier this week that they were going to go give the option of full remote. But I think the second thing, as well as the cultural piece, the second thing is the physical piece, right? Real estate strategies are clearly being reassessed by a lot of firms. So less of a physical footprint going forward. So it look like as the future, particularly if we've sort of got a 2-meter restriction. So what does that mean for the future of fintech? Well, you know, as a result of those two things, the cultural piece and the physical piece, we're going to have a more decentralized workforce. And that's the same with customer interaction, especially in terms. So digitization is now a must rather than a nice to have. And that therefore impacts not only financial services, but every enterprise out there. The first things that are going to be impacted are the human-to-human interactions. And then the second things are probably the human-to-computer workflows. So we always view things as 5 C's. So cost, capital, control, compliance, and competitive advantage. All of those are highly relevant today, but we would overlay that with a human-to-human and then human-to-computer sort of matrix to give us an idea of where the real opportunities are. And I think some of this is good for fintechs and some of that is bad for fintechs, which we can go into.
Yeah, no, I think there's some interesting pivots coming out of all of this in the fintech industry and for the banking industry. But if I may, on a couple of points there, what I find very interesting is, yes, I agree with you that they're all calling, even the bankers, etc., are all talking about, yes, we realize how important digital is, right? Most amazingly is how fast they all reacted and were able to switch, right? It was one of the key excuses for not becoming digital or transforming faster is that they're big and slow. I hear this all the time from CEOs, and they proved that they're not, and I think they even surprised themselves. But I was talking to a couple of CEOs the other day from the banking sector, and one of them said something very interesting. He said, yes, I would like to see more digital, and we will focus on greater digitalization. But he said, however, what saddens him and worries him is that in every financial crisis or every crisis he's experienced, and they have been financial crises in the past, a lot has been said as to what needs to change, but everything reverts to norm in the end. Do you worry about, do you really think that this is a catalyst, what's going on for digital transformation in banking? Or do you think that we still face this danger that the big boys are going to sort of just go back to the way it was before?
I think there is a digital imperative. I think where I'd agree with you is some things get pushed up the priority list and some things don't, right? So some things, the timeline has been accelerated from 3 years to 3 months. And an example of that would be digital onboarding for wealth management, for example, right? In 2020 now, with the fact you can't get in a room with clients, you're going to have digital onboarding. You know, cloud infrastructure and cloud migration, you know as well as anybody, if not better than most, that financial services firms actually don't like to be leaders, they like to be fast followers. Whereas now, there's going to be the firms that are further along in their cloud migration journey are going to be benefiting in this environment for the work they've done prior. And those that are going to look to catch up are going to struggle to catch up as a result of the environment that we're in. So, you know, I think I think there is a revert to the norm with some of this stuff, and I think some of this is cultural, right? A lot of this is cultural, but I do think this time it's different. I think we're going to see significant winners and losers from this stuff, particularly if we remain in an environment where global travel and people-to-people contact means that automation is more of a requirement. And also, if we do see an economic downturn, that is also going to where we're seeing cost pressures and where the benefits of technology and technology adoption are going to play out and have a significant impact on the winners.
Has the situation impacted you as a venture capitalist and more broadly maybe the venture capital sector? Because I mean, obviously there was a pause for thought. We did some surveys with our fintech firms, and one of the key issues, or the two key issues that they brought up as being the challenges of COVID-19 be it that we found that in general, with our B2B focus also in Luxembourg, similar to yours, that it wasn't that bad in reality. But the two key areas, one was funding, where deals that were in process, discussions that were in process were just postponed. And likewise, similarly with existing initiatives or collaborations with banks, which they were in the sales process, and new business development, that just died, and I can understand why. But from your perspective, I mean, yes, I'm sure you took a pause, or did you continue, or what happened in the venture capital industry as a result?
Sure. Well, I'll talk about our portfolio and maybe sort of what we've seen as a result of that. So we've got 14 companies. 5 of them were in fundraising process during when COVID hit, you know, one of those was a debt funding, and that closed. 4 of them were equity rounds. 2 of them have closed, and 2 of them are ongoing. One of those equity rounds was renegotiated, given the current environment. So I think where there are existing rounds or existing relationships, I think that is easier for business to happen and funding to happen. Where I think it is a challenge, and I think this has parallels in selling software, so fintech selling software into financial institutions, is if it is a new relationship and you're looking to build trust, establish trust, get to know each other, without being in the room, we, in this current environment, need to think of new ways with which we can sort of bridge those gaps. So we've got a term sheet outstanding for our first investment since COVID, and that was a dialogue that we had started pre-COVID. So I do know other funds are doing rounds. I do think the heat has come off, so I think there's less money being deployed in this environment. But there was quite a lot of money going in beforehand, right? So, you know, I think that's come off. I do think there's also a lot of capital still to put to work. So for fintechs, staying alive, I think is clearly an important thing to do right now. I think in terms of signing contracts or selling into banks, which you mentioned, we've actually seen a mixture of stuff across our portfolio. We've actually seen some of our firms sign their biggest contracts to date. We have seen some of the bigger contracts that are put on pause. We haven't seen anything pulled, but we have seen timelines slow down. And we've also seen smaller tactical deals getting signed as well. So it tends to be the bigger size contracts where there's been an element of it, of sort of longevity to those negotiations.
But I guess that's because of the thematic focus that you guys have. I mean, there was probably firms in your portfolio that were seen as being providing critical infrastructure for that transition phase, right?
Right.
I think those kind of firms have won really, really big. You talked about, you know, you've done the deals and you have quite a number of firms in your portfolio. You work with many, many others, but what have you been advising your firms to handle it? Because I think there was a lot of panic initially, like everyone, because of the uncertainty.
Yeah, I think, and there's a number of different facets to this for me. There's kind of financials, people, process, and product. So sort of run through that list. But before I do, I think the high level point is, I think as a venture capitalist and as a board director, you know, you want to get into a relationship with your founders, particularly your CEO, where you're in a trusted relationship, where you're sort of in a dialogue around warts and all, around the business, and you know that an understanding and a relationship with, they know what advice we can give and where we can add value and where it's actually outside our skill set and knowledge. Hopefully within our network, we know people who can help if it's something specific. But that's what you hope to get to. And I think I've established that with some of the CEOs I've worked with, probably less so with some of the others, but I think that tends to be how I think fintech should think about investors that they look to work with. So starting off with financials, staying alive is probably the most important thing, right? So how do you extend runway in this environment is a really important thing. Is that either a number of our companies now that actually need capital are looking at either new investors coming in or existing investors bridging to get to a longer runway, so they can really benefit from the fact that they don't have to worry about fundraising when they know that sales cycles are going to be protracted. I think we've also, in that financial bucket, thought about support packages. So of our 14 companies, there's 8 different cities with HQs, and that's 5 different countries. So that's been 5 government support systems and packages we've had to help assess the companies with. That was interesting because it was definitely different in terms of execution across the globe. Burn, right? Getting costs down, that's a really important thing, particularly if it is a pre-profitable company. So thinking about that, and then understanding that revenue is going to be tough this year. You know, I think one of the things is that new sales, as we've just discussed, is going to be tougher. But actually, there's an opportunity with existing relationships where there might be something to benefit from having being an established vendor. Is there something there that you can think about, right? But without face-to-face and building trust, you've got to readjust your expectations on the pipeline. So people, I think the first thing we say is, are you and your team okay? Are you, your family, and your team okay? Because this is, despite it being a economic impacts, this is human catastrophe, right? So I think we've got to be looking after people first. And in startups, that's even more important, where you've got less people and every person has a greater impact than they do in bigger organizations. So support, and I think support is important when we're talking about, you know, furloughing people and cost cutting that may be required in these firms, that you do right by people, because it's a small industry, and this comes back round, and culture is an important asset of these companies. So you know, I think there's positives and negatives there, and I think different parts of organizations have greater impact, right? So sales organizations or sales departments within organizations right now are probably one of the areas where you've got to think about, what do you do with those people, right? Is this an opportunity where you could actually redeploy some of your best salespeople into either customer success or into relationship management, account management, or actually even into product? So, you know, they can start to their skill set, be more valuable to the company, but also feedback some of that valuable insight that they've had from being on the front lines in front of clients. Then we think about process. You know, we've moved into an organization, into a situation where that informal discussion that we would have over a beer post-work, that's not happening right now. So you've got to get a lot more structured about discussions, the clarity of communication, you know, formal versus informal, you know, actions after meetings, and then also not lose the cultural aspect of your firm as well. How do you still manage to make sure people have fun? Because this is a stressful time with those with kids, with family illnesses. You've got to make sure that there's that support mechanism as well. Sales, I think, is an evolving picture when we think about culture. You know, that building trust piece. I think one thing that is definitely that we're seeing is more thought leadership is needed. And that's not just webinars, because I think everybody's kind of overdone with webinars as we sit on one right now. But you know, so clients can really do the education in their own time about the product. And that isn't about the webinar, you saying what you want to say. It's about what are you saying that actually educates the client in a way that moves them along that sales cycle. Articulation of ROI. That's a really important thing, and I think quantitatively rather than just qualitatively. If you look at so many sales emails, they talk about how this can, you know, dramatically impact this. Right? That doesn't mean anything to anybody. And to a CTO that gets hundreds of these emails a day, you're just going to get lost in the wash. So product, and this goes back to the point that you mentioned, some products are very fit for purpose right now and some are not. So if you've got the runway and you can stay alive, there might be some serious pivots going, retooling that's required. But leaning on existing relationships and established clients, that can really help you pivot in this environment because those are already trusted relationships.
You touched on something that's very dear to my heart there, which I think applies COVID-19 or not, and that is the articulation of the value, right? And particularly, obviously, in the sector you're working in, you're mainly focusing on B2B type businesses. And I genuinely, but tell me if you agree with me or not, have never understood in all my time in this industry why firms or fintech don't put numbers around the value proposition, because B2B is relatively simple, right? It's, to me, I box it into 4. It's you're either helping a firm increase their revenues, helping them manage their costs, making them more efficient, or comply with a legal requirement. It's not much more complex than that. and all of those things in some way you can quantify. Yet firms, as you say, they often don't get to the nitty gritty, and I think it's interesting you say that. So I'm glad you agree with me on that area. But what about the flip side, right? The customer. I mean, your firms are dealing with banks and financial institutions. I mean, just as everyone, a lot of uncertainty at the beginning. They had to sort of run around like headless chickens, well, and actually did a pretty good job of sorting themselves out for the new environment. But the European financial landscape, I put it to you, is not looking particularly good, particularly the banks, right? The average return on equity of a European financial institution is just over 6. Some of the banks and their non-performing loans relative to tangible equity is diabolical. I was reading an article today that somebody sent me about the portfolios of collateralized loan obligations and how, I mean, it harks back to the crisis 11 years ago. I mean, what's this landscape going to look like in 5 years' time? I mean, the combination of more digitalization, maybe more challenges, a lot of banks, in my opinion, likely to go bankrupt. What are you picturing as a VC? Because I'm sure you have to think about these things in terms of your portfolio and investments.
Yeah, I mean, I think it's a bit of a barbell and in venture as well, right? I think you have the biggest and best tier 1 players out there that are going to be able to survive, right? So, and I think since the last crisis, the American banks have benefited significantly for the ecosystem in which they operate. So I think the big players out there are going to be okay. I think there's going to be a bunch of sort of niche players or regional players or sector-focused players, right? So, if you think about the likes of Macquarie's that focus on project finance, you think about some of the Asian banks that are regionally focused, I think a lot of those firms are also going to be okay. I think it's the stuff in the middle that feels like it feeds into the comment that you've made. I'm not sure it's necessarily about going bust. I think it's more about consolidation in the industry. And then, as you sort of go back to the question of just like, what does it look like in 5 years? I mean, it's anybody's guess, but maybe you and I can take a bet today and we can revisit this in 5 years and see whether I was right. But there's a couple of themes that I think are going to be poignant. If you look at how much corporate venture capital has gone into fintech, right? Figures that I'm picking from CB Insights from the third quarter last year. Of $8 billion of capital in fintechs in 2019, half of that came from banks, right? There's been 500% increase of banks investing in fintechs from 2014 to 2019. Now, thematically, if you look at corporate venture unit deployments over economic cycles, and the data in this goes back to the 70s, it definitely is a laggard, but there is a huge correlation. So if we do go into a downturn, I would anticipate that actually a fair number of banks pull back from being investors in fintechs in the same way that they have been today. So that would be one thing. I think another thing is, if you think about how, you've mentioned a number of the sort of financial stats that people assess banks as when they're comparing them to peers. But, if we look recently, we've kind of got an ESG overlay kind of coming into assessments now. Could we, post this, actually have a digital overlay where people are looking at firms and comparing how digitally enabled they are? And I'm not talking about digital, innovation theater, which we've all aware of. I'm not talking about another press release about using AI or another lab announcement. This is about actual execution of innovation within the business. And I think that comes in two forms, beta and alpha. Beta, where the business can take significant costs out, and I think that's where the business can operate together, and a lot of that is middle and back office applications. And then alpha is, I think, where there's obviously going to be significant differentiation. I think a firm, if they haven't got the beta sorted, they're not going to be able to sort the alpha. But themes like modularization, we're an investor in a business called Genesis Global that looks at microservices within capital markets, legacy application or legacy stacks, migration to something that is much more building block orientated. Interoperability. So ChartIQ with Ensemble is one of a number of vendors out there that are sort of automating workflows. So this is more complicated than RPA, less complicated than data science, but it's actually taking that human to human or human to computer workflows that we were discussing at the beginning of this and turning that into something that's a lot more automated. So that's keen to hear you.
Oh, no, I agree with you on all of those points. But that's part of the problem, Mark, is I often have done. That's why we get on. We see a similar vision. I mean, one of the things, and just quickly before I ask this question, I've got two main questions, one on this and one other question. So I see some questions coming in from the audience on chat. Please keep them coming. It would be handier if you posted them in Q&A, because then that segregates it from the casual chat as well. So if you could do that, that'd be fantastic. I'd also ask Anthony, because I haven't used Remo for this before, if we can bring people live to ask the questions so they can ask them personally rather than me read them out. Now, on the infrastructure side, I mean, let's talk about the you know, the Trojan horse that's always lingering around there, blockchain, right? I mean, you're in this infrastructure world. I have to admit, we're seeing some really interesting things now in Luxembourg, but still the pace is reticent, I think, from adoption in the financial institutional world on any massive scale. We see like individual institutions playing around and doing things, but given the nature of blockchain and its potential applicability in, say, infrastructure, and interestingly in capital markets and securities infrastructure, Mark, I mean, do you see that sort of taking a little bit of faster pace now? Our bank, I know that some UK banks have been looking at this, but nothing seems to really happen in that area. You know what I mean? Do you see that moving forward as a potential upgrade to all of this infrastructure and catalyzing a lot of the change in financial markets?
If we go back to when DLT or blockchain or smart contracts was first a topic, it was a technology looking for a problem to solve. Since then, we've moved to a discussion where there was a whole bunch of testing around different use cases. And I would say 90% of the original thoughts around this actually aren't really valid for how a lot of these institutions operate. So, you know, are you ever really going to have a pure decentralized application within capital markets? Probably not. You're probably going to have private chains, and you're going to have trusted networks and trusted nodes. So I think there is some applications now where this is relevant, but a lot of them are not necessarily the cost savings that people would have hoped. So I think it's going to be actually far fewer applications within this. And it's, to me, if I compare, like, you know, R3, actually R3 have gone about it by thinking about the route to market, not necessarily the technology. So similar with the buy side, there's a number of initiatives out there where you get a collection of institutions and try and drive this stuff through. And I think it's probably similar in the crypto post-trade or crypto custody space as well, that it's actually as much about your route to market as it is the technology. But to me, you know, that is a long game, and there's so much more tactical low-hanging fruit that can be executed on today that is already out there with you know, proof of value. But I think some of this stuff will stick, some of it won't.
Just quickly, as an addition to that, have you invested in any blockchain infrastructure providers?
So we've invested in a company called Baton Systems, and we describe it as non-blockchain blockchain. So they are doing ledger rebalancing, so they're kind of agnostic to the underlying ledger. Some of their use cases are in a big global bank rebalancing the FX ledgers in non-CLS currencies. They're also used by another tier one bank around rebalancing collateral ledgers. But that could also be applied to any other industry as well. And the reason we felt comfortable with this goes to exactly your point, which was what's sticking and what isn't sticking. And that was a company we were in dialogue with for 4 years before we wrote a check. So we've waited until the heat has come off before we deployed capital, because we also felt the valuations on this stuff when with the hype cycle were just ridiculous. And I can understand why financial institutions might do it because they're looking at a strategic value, but as a financially orientated investor, that just makes no sense.
No, the valuation and the hype around it was insane, as you say, and the fact that everyone was leading with the word blockchain and explaining their value proposition by talking about blockchain rather than about the problem they were solving, I found insane. I nearly registered the URL blockchain.ai. I thought that would make me a few gazillion as well. I mean, it was all just change your name to anything blockchain and you seem to be able to make a lot of money. Listen, last question before we ask the audience, and I could ask so many more, but a little change of theme because it seems to have been forgotten slightly in this whole COVID world. Brexit. You know, there's no question about it. The UK and from our perspective, particularly in Luxembourg, UK has always been the center of finance in the world and definitely in Europe. And from Luxembourg's perspective, will continue to be so in the future, regardless of being in the European Union or not. However, given the situation, you know, potential maybe mistakes being made in terms of managing the COVID-19 crisis, the economic crisis to come, and the way all this is being handled, plus maybe some more sort of bigger factors that are occurring now in the Western world, isolationism, you know, a lot of friction, let's put it that way. And then comparing to Asia, where even with the COVID-19 crisis, be it that it did originate in China, and yes, there may be some, you know, questions around information and data. I mean, China seems to be roaring ahead. And I remember what some of our conversations 7, 8 years ago, where we kept saying that China's going to come out of nowhere and take over, and they seem to be doing that. Do you think the balance of power is shifting? Do you think this is the time where Asia begins to really dominate? Because the US seems to be up the proverbial creek without a paddle at the moment. I don't see any light there. UK's got its own problems. Continental Europe, always some friction, always, you know, never quite getting there. Hopefully driving further. But do you think China's going to be really dominating this sector in the years to come?
I think China has less restrictions around data and personal data. That means you've already got an ecosystem around payments and credit scoring far in excess of what you would ever see in the Western world, because of where individuals' data and data rights sit, right? However, there, you know, in the last, we invested in a company called Privatar, which was data privacy engineering, still is data privacy engineering. But, you know, during the time that we've invested in them, which was sort of 2016, when we did our first check into that business as a late seed deal, there's now over 170 governments globally that have data privacy regulation in some form. So I think China has its own ecosystem that means it can dominate domestically, arguably regionally in some of the regions that it has significant trade ties as well, I think. But one thing that is clearly coming out of COVID that links back into your Brexit question is there is a political divide globally that's only getting greater rather than narrower. So I think everybody's kind of got their own problems. If I'm talking about infrastructure type companies and B2B, I think the China point that we're making is actually more to B2C orientated, or B2B within China and China's ecosystem. So I think globally in ASEAN, Europe, UK, US, I think there's still very much all to play for.
That's that's an interesting point. Yes, the data privacy issue is a thing, but I wonder if, given that they have less restriction, that, as you say, they are able to move a lot faster to build these solutions. I mean, in a short space of time, I mean, they've come out of nowhere as far as I'm concerned.
And on that point, Tencent and Financial are two of the most prolific minority investors in fintechs globally. So, you know, they've been very smart about that strategy too.
Yeah, and look at the speed at which they've expanded into Europe. I mean, you can't go to an airport now where you can't see Alipay and WeChat being accepted as payment methods now.
Yeah.
Most of Europe, right? Very interesting strategy, but they are ultimately, as you say, B2C. I mean, there's still big issues, I think, in the B2B space. So anyway, Mark, thank you very much for answering my questions. I'm curious to know if there are any questions. Nobody's posted in the queue. Oh, there are. Oh, my God. There we go. Anthony, can we bring these people live to ask personally, or do I have to ask on their behalf?
We can bring them live. Shall we start with Elliot Goigman?
Yeah, why don't you kick that off? All of the questions then, Anthony, okay?
Yes, please go ahead.
Hi, Mark. Can you hear me okay?
Yeah, I got you, Elliot. Hi, how are you?
Hi, guys. First of all, Nair, thank you very much for setting this up. It's really exciting. So I'm a founder of a neobank that recently launched in France and Spain, and we just started issuing cards in June. So listening to you and understanding that your focus was mostly on B2B, I wanted to understand if neobanks are part of your interest, of the scope of your interests.
So not within our fund, but I think there are lots of venture firms out there that are investing in the space. I've had personal investments in the B2C side. So I was one of the early backers of Nutmeg and Seeders, which was sort of, I guess, the first wave of the new fintech. But I think neobanks is an area that the way that we approach investing is what can we actively influence the outcome of in terms of our network and our connectivity into the sector. And we just didn't feel that we had strengths that could leverage that neobank piece. So unfortunately we're not, but I'm happy to point out some investors for you that do look at this sector when you come to fundraise. So my email's on our website, so feel free to drop me an email.
Really appreciate it.
No worries.
So we have Dan Finney would like to ask a question. Dan, please go ahead.
Oh, already there. Okay, cool. Hi, Mark.
Hey.
I've been in fintech about 5 years, mostly payments and trade finance. And obviously, if Nick Ogden, WorldPay, Clearbank, and now this RTGS Global, we've looked at clearing, and settlement seems to be the big cog in the wheel. So this is really a two-part question: RTGS Global plus this whole standard of payments and messaging. Are we really there, or is the reality beyond the hype? Because it seems like a big egg to crack.
So I am not a payments guy.
Oh, sorry.
Okay. No. Like there's people in my team who know a lot more about this vertical than I do. So for that one specifically, I think they would be better placed for that. But I mean, I think clearing and settlement is an area within this space. And I mean, I think Baton Systems was one of the companies that we were talking about that sort of helps with that ledger piece. But I totally think this is an area where there has to be some element of improvement. The thing is, it's such an active space as a bucket within fintech.
But actually, not being a payments expert makes you more clear objectively, right? So, is it a data problem? Is it an infrastructure problem? Because I mean, we've seen Earthport being bought by Visa, and that's kind of this whole. I actually think if you can get the before, during, and after the entire payment stream, so that you can have agile messaging of all parties, the technology seems ready. The stacks, the clouds, the data governance. So I think this is a cool opportunity if you bring the framework of ISO plus the magician of Nick Ogden. I mean, they're going live in a month. Are you familiar with this, Nazir? This really has some legs, I think.
Mark, do you mind if I make a quick little comment on this one?
Yeah.
Payments and foreign exchange has been most of my career.
Well, you weren't in the room. You must have gone for your drink early.
No, my camera went off. I'm sorry. There's been a lot of initiatives and much needed initiatives around payments and infrastructure level. And from my perspective, the big unsolved problem right now is particularly in foreign exchange, right? At an infrastructure level. CLS is great, but there are potentially better ways to do it. But what people tend to forget is that the banks own this market and they make a hell of a lot of money off of the opacity and the control that they have and the inefficiency in which the way the market does work.
No, they,
right?
they cash in from the friction.
Yeah,
Sure they
they
do.
cash in from the friction. Now,
Yeah.
the one out of all the initiatives I've seen, so many in recent years have made big noises and then fallen by the wayside. I mean, one of the biggest recently was Settle. They had a fairly, I can't remember the guy's name, but he was a fairly
Well, that was
entrepreneur.
that was blockchain. I know about the SETL.io. Yeah, blockchain was at the heart of it, but it was they were calling for a big shot there.
Yeah, but I mean, to get to the point, to get to the next question, I think, Nick, if there is somebody that might be able to do something in this space, and I talked to Nick about this actually when he told me about what he was planning on doing with RTGS Global, he managed to get banks on board. He knows how to do that. So there,
Correct.
I think we potentially have a mover and shaker, but only time will tell, because we've been in a similar position before over the past 10 years, and they end up crashing because when it comes to the crunch, I mean, just look at Nostro accounts, right? I mean, banks make.
But actually, I
billions.
don't think you can point the finger at Swift, can you?
No, but the inefficiency of Swift is what helps these guys make all this money, right? That's the point.
Yeah, right.
Anyway,
That's a good point.
all right, let's move on to the next question. Sorry, Mark,
cheers.
interject. I just.
Cheers, Dan. Yeah, it's your area, man.
Hi, Lucy. Good afternoon. Good evening.
Hi, Mark. I'm Lucy Heaven. So I'm the co-founder of a not-for-profit association called RegTech Women. So we held a panel discussion actually last year, and we had a couple of the financial institutions on the panel, and they both said that what they would like to see is that the tech firms collaborating more and kind of forming ecosystems so that they're solving kind of a bigger challenge. Lots of really great innovative tech solutions, but in terms of adoption, you know, with their big kind of legacy infrastructures that they have, you know, adoption is really hard for kind of these point solutions. So they want to see this collaboration. So from your point of view, you know, how do you see your involvement, I suppose, or how can you to help to build those ecosystems and bring those tech firms together?
Yeah, great question. I think it's great insight. So, I mean, you also made a comment on the other chat, which I'll answer as well, which was about RegTech. So we're huge believers in this, and I think a big part of our job in the ecosystem is actually making other firms aware of each other where there is a potential tie-up. With the banks that we advise, this is often something they very much bring up. And this is where interoperability and frameworks like Finsumble are very important for creating workflows and data transfer at the front end rather than having to connect as APIs on the back end. Now, I do think a more modular ecosystem will mean that actually connectivity between systems is easier. The issue is you've got to migrate off some of this legacy stuff. So I totally agree with your point. I think the industry, as in the buyers, know it. Our comment to the buyers is it's also on you to tell them to collaborate with others as well. And I think it's also on the entrepreneurs to not think that they're building Uber alone, right? You know, they're going to need to work with others. So we definitely think that's key, and that's why things like Finsumble for us are important tools around that interoperability. You also made had a comment, Lucy, around RegTech, and you were sort of your comment was ROI is hard to measure with RegTechs. And, you know, I think there's some truth to that, but the danger that we think with that is any business we've been involved with where the sole for using this is you have to use this or you're going to get fined. It's a negative connotation. And I think from a sales perspective, that's never positive, right? So whenever we're advising RegTechs, it's, yes, solve the regulatory problem, but what alpha are you also bringing to the firm? Are you also doing data management? Are you also, you know, sort of creating, and again, the 5 C's, right? Cost, compliance, capital control, and competitive advantage. Compliance is only one of those. Whenever we look at a firm, it has to hit 3 or 4 of those 5 to be a compelling sale. So for us, actually, ROI on RegTech alone is never good enough to build a meaningful business.
Yeah, no, I agree. Thank you. And I think it comes down to kind of who's the buyer as well. You know, in the situation of RegTech, it's still quite a grey area, I suppose, because you're solving a compliance challenge, but actually a lot of the value that you're bringing is actually to other areas of the business. And I think that's something for me that I see a lot of the RegTech's kind of missing. They kind of focus very much on this is the compliance challenge that we're solving and forget the value part.
Yeah, and also the personality type of that buyer is naturally is hugely risk averse. So that's another challenge that RegTech has to overcome as well. But I am aware of your association. I love what you're doing. There's imbalance around diversity in the 9 metrics of diversity throughout this industry. Anything you can do, anything help I can give to help improve this stuff, I think is great.
Thank you very much.
Thank you. I think one more question. There's so many questions, Mark. I could imagine this could go on for hours, but let's do one last one. We're going to have to wrap up, and I apologize to everyone else. Anthony, you make the pick. It's all on your head.
We have Christian Parivar, who's joining us from Montreal. Christian, are you there? Christian?
How are you? Hi, Mark. Hi, Nadir. Hi, everybody.
Hey. Hi, Christian.
Nice to meet you. So, really excited to listen to all this, to learn a lot. My question was, so I've been, obviously, thanks to generous support from LHOP, I've been involved in some ways in art and finance, and that's something that Luxembourg has put some initiative in going back to 2008 with Adriano Di Piccinato creating the report. So, Fintech, clearly, we know that there's interest in how arts and collectibles or can be looked at from sort of like a dashboard perspective, and all that sounds really interesting. But I just want to see sort of what you see, because you obviously much more engaged in the finance on a day-to-day basis. How do you see that playing a role as wealth managers or banks or just generally financial institutions are looking at on-cap new ways to create?
So I actually follow the art market, so I feel like this is one that I'll and then I'll hand over to you on the second. But to me, actually, it's not about technology in solutions like this, because it's such an illiquid asset, and there's not the speed of transaction like there is in payments or securities.
Absolutely.
So, for me, this is all about what is your route to market. And the problem with the art world is it's either controlled by the high-end art world, which is where the value of this stuff is, and the value of this in terms of ownership, who owns it. You've got several things. The art market tends to be
the quality of the good.
Yeah, the quality is good, right? But the art market tends to be quite secretive anyway. So there's no KYC currently in the industry. So there's a massive bridge to cross there. You've also got a very few institutions that control the entire network. So it's either high-end galleries or it's So unless you have them on board as a route to market, you're kind of stuck.
I totally agree.
So that would be my 2 cents on that. But eventually, could there be private keys around this kind of stuff? Maybe.
No, I'm glad you brought that up, because this is just to say that I don't think that, I also agree with you that I don't think that this kind of a secondary market data analytics approach alone is the way to go forward. Is that you really have to be in the primary market and be able to make a difference and bring value there, and then take some of that knowledge perhaps, and it doesn't have to be technology based, but look at ways to. But you do see that there's a growth in that area. Just I guess my 2 cents.
Yeah.
I'll just add one thing to Mark's point there. What you just described, Mark, in the art market and the concentration of the stakeholders and the opacity, etc., that's the gold market as well. That was the gold market, even worse, 40 years ago. And even gold is traded like spot, so I used to trade gold, and I designed the exchanges around trading gold against US dollar. It's literally controlled by 5 banks. It's not a particularly liquid asset. I mean, I've been into the Fed in the US, where at the end of the trading day, some guy in white gloves literally moves gold bars between pallets of the banks, right? I think art and high luxury items is a very interesting market in the same way real estate is. And there I would differ a little bit in that I think technology and potentially blockchain can play a part in it. Now, everyone knows, maybe not so much, we haven't talked about it. I mean, I argue the same as Mark, that, I mean, it's a technology looking for a problem to solve. But in this area, I find it particularly interesting in terms of fractional ownership and driving a lot of liquidity, right? And I think it's interesting because we're losing assets to invest in. I mean, I find it, for example, ridiculous right now how fast the markets, particularly in the US, are recovering through this COVID crisis, and there's no justification for it, except for the fact that there's nothing else to put money into by the large fund managers that need to be long, right? And fixed income has kind of died. Sorry, Ian, Mark, I think you know this, right? I mean, it's a dead market. And art and luxury, if we can work on the holistic value chain, and I think it has to be the entire value chain. It's not little spot things. It has to, as Mark was saying and Lucy was saying, this ecosystem approach. I think there is a lot of potential there, and we're seeing the massive growth in it as well. Obviously, I mean, we didn't touch upon it, but ESG is another area similarly where I think there's huge potential because we need new asset types. It's as simple as that.
That's exactly what Adriano Di Piccinatti had said too, that the consortium approach is the way to go look forward in the art.
Exactly. Listen, thank you very much, Christian. We're going to have there's so many questions. Mark, that is, again, fascinating. I love talking to you, Mark. Thank you very much. For being with us. Thank you for everyone for listening. Mark, are you able to stick around for a quick glass of wine with the rest? Because I'm sure other people would love to talk to you.
Yeah, definitely.
Yeah, so we're gonna switch off. We're gonna join in the tables and network around. Obviously, do remember in the background, our house DJ Ben, is playing his tunes, and he's fantastic. You got to listen to him. And then we'll be going for at least another hour. So thank you all again for listening, and thank you, Mark. Fantastic chatting.
Thanks, Nazir. Thanks for having me on. Let's enjoy the music.
Take care. Bye bye.
Cheers. Bye.